Good morning. This is Ken Long from Tortoise Capital with the review of the weekend trading report for May 18th, 2014. We have a market that is in bullish normal conditions on an annual basis using weekly RSI 14. We're at 63 out of 100 or towards the higher end of normal. Short-term condition using 10-day NDX, we're at 46 out of 100, slightly below the mid-range neutral. Looking at the market mosaic, price with respect to the 200-day moving average is red, bullish at 5.86%, so we get just under 4% cushion towards sideways markets. Slope of the 50 is basically flat at 0.001. ADX declined to a very weak 11.0. ATR percentage is low end of normal at 0.81. The risk index is the 30-period moving average of the VIX divided by the 10-period. The threshold between risk on and risk off is 1.0. The current reading is at 1.1 for risk on, meaning riskier assets are favored to be owned. Take that score of 1.1 and compare it to the last 5,000 days and compute the standard deviation. The z-score, or the risk z, is at 0.82. You see a time series of the last 90 days here. With the risk index approaching a critical state at 1.0. It's been a good swing trade in XIV. It's, no change to the blended monthly rebalancing. Next reevaluation is due on or about 1 June. You can see the current holdings in the ETF 13, 22, and 32, and then the current winners in each of these population categories. ETF 2 theoretical exposure remains at 80%. The model is at 80% exposed. This is a quick look at the ETF 13 and 32 for the winners. Only a handful of positions on cash. The ETF Max, agriculture, coffee, India remain near the top. Those that are green and white or green and yellow are favored as newly emerging strength leaders. Those that are white and green or yellow and green are ones where we're seeing weakness creep into former leaders. These are the leading candidates, top 50 based on blended monthly rebalancing, the S&P 500 and the S&P sector spider that they belong in. Market health check. Dark blue shaded area is the 30-period Bollinger Band plus or minus 1. The light blue shaded area is the floodplain, which is 30-period Bollinger Band plus or minus 2. The pinkish red ribbon through the middle is the dragon. That's a 10-period Bollinger Band plus or minus a half. We have price back inside the river, just above the Bollinger Band mean. It's in the middle of the 10-period regression channel in blue, 30-period in black, and also the 90-period in dark green. So this is a market that is fairly valued here at 188. You can see we've had almost 50 days of sideways choppy channel here. That's why the ADX is so low. If we get above this purple line price level at 190, then we're free and clear, no resistance overhead, new all-time high. That would be the green zone, and I would have a long side bias. When I'm in the yellow zone here, I'm waiting on the intraday trade for market direction to point me for the direction of the day. If we were to fall below 182, would be very near sideways channel, sideways market conditions there, and then my bias would be to the short side. You can see we've been overbought for a while and are now almost dropped into oversold. And then the jaws of percent price oscillator have closed and basically are not predictive either way. And that's just due to the 50 days of sideways chop. ETF2, the regional report, we're at 80-20 invested in cash based on 2 of the 10 indexes on a cash position. Um, the S&P at 58 gets the tie, so it's doing a little better than the EFA. Inside the U.S., strength is in large caps, mid caps, tech, then small caps, the 2 strongest sectors. Asia less Japan, and Latin America 2 weakest, U.S. small caps and Japan. Little change in the world market model. Leadership in Asia found in India, Philippines, and Indonesia. Only the Dow, the S&P, and small cap or mid cap value are on above average in the U.S., otherwise below average. Silver lagging gold, but above average scores in treasuries, corporate bonds, and real estate and oil. Brazil and Latin America continue to dominate. The ETF2 database top 30. And again, the green and white are emerging leaders. That's Brazil, Turkey, South Africa, Colombia. The Dow 30 through the same lens. Cisco is of interest here. Liquidity stats for the top 30 most liquid ETFs. Shifting to the daily report from Friday, or for Monday from Friday. No signals in channeling overreaction. We have quite a large number of individual swing trade system frames. Lots of channeling overreaction, 5-day down in Procter & Gamble, some triple screens, and a number of 551Ws to work with. A handful have fired as single digits on RSI2, such as ExxonMobil, JP Morgan, and so forth. Among the ETFs, lots of 551W candidates. Ag is on a channeling and overreaction. Auto framer stats based on minimum 2-to-1 reward to risk using the auto framing technique. And the rest of the market mosaic just for your reference. We're back into the swing trade workshop tomorrow, so I'm going to sign off early here. Keep your risk measured and your powder dry, and be ready for an extension to the upside in this market.